Interest rate rises push Aussies to the limit. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to have a look at this article from Australian Broker. Because, well, we all are aware that the cash rate is heading up quite dramatically. We're even seeing some fixed rates at over 7%. So interest rates are certainly going up. The most dramatic impact will be to people who fixed below 2% and will have to exit at a higher rate. So let's have a look at what they have to say here, because some people are hitting now the 3% buffer. Remember, when you were applying for a mortgage, APRA put on a 3% buffer for the banks, a requirement that you should be able to handle a 3% increase in interest rates. People are hitting that now. And there's no sign that interest rate increases are going to stop. So, rate rises are pushing some borrowers beyond their stress test limits. Now, I am hoping that people will make financial decisions, will tighten their belt to do what they can and not be forced to sell. But perhaps that's naively optimistic. I think there's a lot of Australians that have never really lived through tough economic times or even a recession, because the last one doesn't count, and this may be a lesson for many of them. The Reserve Bank of Australia hiked interest rates again this month, taking the official cash rate to 2.85%, a move that has pushed some mortgage borrowers to their stress test limits. The latest rate hike was the 7th straight RBA increase since May, pushing the OCR to its highest level since April 2013. This also means many borrowers are now at the limit of what they can afford to pay, with some moving beyond their stress test buffers. Now, this is the limit set by the bank. I'm sure some people can afford to pay more, and they'll just have to live quite frugally. What we're going to see is we need to keep an eye on discretionary spending, holiday spending over the Christmas period and January. Now, some people are mentioning in the comments, they're putting it out there, what if they just afterpay all the holiday spending and then next year becomes a complete disaster? Which is a legitimate concern. Economist Angela Jackson said the current cash rate has now risen by more than 2%. More than the 2% rate hike RBA's own forecasts have previously shown would drag 10 to 20% of all households into mortgage stress, the ABC reported. That's a significant number of households in debt stress, Jackson said. Now, I need to bring up a definition. This is the definition of housing stress, everyone. Let me just find this here, because, well, there's a few things to consider when we're talking about mortgage stress. Now, the ABS defines housing stress, and mortgage stress would be covered in that if that's your housing, as low-income households that spend more than 30% of their gross income on housing costs. Now, if you're not a low-income household, does this apply to you if you're spending more than 30%? You won't technically be under the definition of housing stress. Others, like Roy Morgan, define it as your housing costs or your mortgage repayment costs are more than the money you've got coming in, which is even more scary. The latest 0.25% rate hike meant a borrower with $500,000 mortgage with 25 years remaining on the loan would see their repayments rise by a further $74 a month. That's a total $760 increase since rate hikes began in May. Yes, but we have to remember this May was at 0.1%. This was artificially low, insanely low. Probably to juice up the market. People probably saw that thinking this is my only chance to get in the property, and I hope it doesn't burn them. For a $750,000 loan, that would be an extra $112 in repayments per month, totaling to slightly more than $1,000 since May. Jackson said a huge concern for many borrowers was moving into negative equity. That's when the value of a home falls below its loan amount, which can lead to forced sales to allow the bank to recover their losses. Now, I've talked to mortgage brokers about the risk of that. Now, sure, it can lead to forced sales, but if you're still making the repayments, what would the bank do? They would rather just keep it going. Keep it going if you're just not making any waves. You're going to be stuck with that bank. You're not going to be able to refinance. You're going to have to put up with their conditions. They may ask you to throw in some more money, but will it lead to forced sales? Remember, that's a last resort. And we went a whole year where the banks just didn't do any. So I really hope Mortgage Keeper remains a joke. I hope it remains a joke, but we've got shared equity coming in now at a state and federal level. I really hope it stays a joke. We know a lot of borrowers are in significant financial stress, Jackson said. This wasn't the first time rates rose this aggressively. The last time it happened was in 1994. 94. How old was I? I was a kid. I remember that. That's around just after we moved from Victoria to Queensland, because it was tough in my father's construction business. Construction work just got really quiet for a period there. The last time it happened was in 94 when the central bank raised rates from 4.75% to 7.5%, a 2.75% lift over 5 months, the ABC reported. There you go, everyone. So let's have a bit of a talk about this one. More and more Aussies getting pushed into mortgage stress. Will it lead to forced sales? Hopefully not, but there will be some. There are going to be some people who sadly FOMO'd in, who were probably incentivized by the government, given money by the government even to jump into housing, and they're going to get burned by this. Will people realize to not trust the government or the Reserve Bank when they say everything's going to be okay, when they intervene in the market to juice it up? I'm worried. I'm worried people won't learn the right lessons here, to be wary of those in authority when they say they're here to help, or when the government says, we're here to help, we're here to give you money. Rather than addressing supply issues, rather than addressing legislative issues which are making housing more expensive, rather than addressing taxation, they just want to keep juicing up the market and doing it to buy votes. The RBA promising no rate rises until 2024. Well, what can we say? As always, thanks for watching. Like, share, and subscribe to the channel. Check out my other channels, HeiseBim and HeiseSays International. And if you're a fan and enjoy the content I discuss here, there's a few ways you can help out. Financially on YouTube or Patreon, using our referral links, buying our pocket squares, or calling us if you need an architect. Take care, everyone. Have a great day. And I'll see you in the next episode of HeiseSays.